Treasury bills market is sustaining its bullish run, with investors focused on long-tenured bills as the CBN releases results of last week's retail SMIS auction results today. However, on the bond side, the bears are yet to loosen their grip. Ifeoma Onyejekwe, fixed income trader at UBA, joins me now for a market update. Ifeoma, thank you for joining us today. Let's get right to it. To bring us up to speed on market action today across the different segments, let's start with the money market.
Thank you very much, Esther, for having me. So today has been generally quiet because the CBN carried out discretionary CRR debits across the industry, though it was certainly less than over 1 trillion carried out of CRR debits carried out last week. So the market has been very, very liquid and will continue to be liquid throughout this week. FAC allocation payments are expected this week, and then mature CBN swaps still lingers in the system. So at the beginning of this week, we saw a bullish run in the Treasury bills space, where bills were trading at 1% levels from 3% levels last week, and the bullish run continued all through this week. There was also an NTD auction on Wednesday, where 56.93 billion was offered and sold, and stop rates decreased on all tenors since it was very, very heavily subscribed. The 91 days reduced to 2% from 2.75, 182 days reduced to 4.33% from 7.15%, while the longest tenor reduced to 7.3% from 8.49. So we've been seeing a very, very bullish run. And for the bond space, we haven't yet received the bond issuance calendar for Q1, and that will drive market direction once it is released. But it has been rumored that the 2037 bond will not be reissued at the next auction, and it's currently trading at higher yields, higher yields than other long tenor bonds. So if indeed it is not reissued at the next auction, we'll likely see a retracing in yields in the secondary markets.
Well, speaking about secondary market, I understand that because analysts were telling us that they expect to see some buying interest today at the Treasury bills market because of those unmet bills that we're expecting to spill over into the secondary market. What can you tell us about that?
Yes, there has been slight bullish reactions, unlike what has happened from beginning of the week till now because of the CRR system debit. So that has reduced the liquidity in the system, although we have still seen some slight bullish sentiments.
Let's talk about the FX market. Bring us up to speed where the Naira is against the dollar at the INE and NAFEX.
Well, it has been very stable. We've been seeing consistent CBN interventions in that space. So it's currently trading around 420 levels. So it has been very, very stable.
So what are investors' expectations, sentiments ahead of, I believe there will be an MPC meeting this month? To talk to us about what they're expecting, how investors are thinking about inflation, where inflation is. Of course, we're still in a low yield, low of the investment return environment, but talk to us about how investors, what investors' expectations are.
Due to the forthcoming presidential elections, investors are generally very cautious pending the outcomes of the election, but inflation is expected to go higher. Following the removal of the petroleum subsidy, increase in electricity tariffs, as well as removal of over 6 trillion naira from the oil sector waiver, we will likely see an increase in inflation in the incoming months.
All right, final question, your forecast for the coming week, trading for the coming week?
We continue to see likely bullish sentiment as FAC allocations are expected to come in next week, so we'll continue to see buying interest across all maturities.
All right, we'll leave it there. Thank you so much, Ifeoma, for talking to us today. Pleasure to have you on the show. That was Ifeoma Onyejekwe, fixed income trader at UBA.